Okay, Karen, you can take it away.
Good morning. Welcome to today's webinar, Insurance and Liability Considerations for Your Food Business with Connor Lee of Fuse Insurance Limited. We recognize that Manitoba is on Treaty 1, 2, 3, 4, 5, 6, and 10 territories, and the ancestral lands of the Anishinaabe, Anishinaabe, Dakota Oweite, Denisovan, Innuit, and Nehewik peoples. We acknowledge Manitoba is located on the homeland of the Red River Métis. We acknowledge northern Manitoba includes lands that were and are the ancestral lands of the Inuit. We respect the spirit and intent of treaties and treaty making and remain committed to working in partnership with First Nations, Inuit, and Métis people in a spirit of truth, reconciliation, and collaboration. To introduce Connor, Connor is an experienced and passionate commercial insurance broker who specializes in attracting, retaining, growing new business across Canada. A graduate of the Haskeen School of Business Technology Management program, he balances his love of technology and insurance to provide the highest level of care possible for his clients, including e-commerce, cannabis, manufacturing, and other high-risk liability sectors. He is the incoming president of the Professional Young Insurance Brokers, Alberta's Young Broker Network Group. He is also Alberta board member for the Young Brokers Advisory Council, Canada's Young National Broker Committee. When not serving his clients or industry associations, Connor is an avid rock climber and home chef. Thank you for joining us, Connor.
Thank you for having me. Happy to be here. Perfect. Yes, thank you so much. I'm happy to dive right in to chat about everybody's most favorite subject in the entire world, commercial insurance. Or at least it is your favorite if you're me, but maybe some of you can join me. We have a couple of things to go over today. For a quick agenda, I'm mostly going to be talking about various coverages that are specific to the food processing industry and that you might face in your own businesses. We're going to talk about specifically things that we consider mandatory coverages that every business should carry. So recommended coverages if you do have the risk exposure, what kind of insurance products are available to help mitigate that risk. And then we'll be looking at some specific considerations for certain kinds of businesses, namely co-packing, community, commercial kitchens, food demos, and businesses doing online and international sales. If you have any questions, please do keep them in mind. Feel free to raise your hand at any time. I am happy to take questions whenever, though we will have a period at the end to do that as well. And if you have any specific case studies or specific questions about your business, particularly that we can't answer in the time period here, please do get in contact with me and we can discuss that. One more point of order is that we will have a lot of the information that we're talking about today in a document that we prepared in cooperation with the Manitoba government here that will be available, should be popping up in the chat at some point, as well at the conclusion of this webinar, and later online at the Government of Manitoba website, resources for food and agriculture businesses. So moving forward, we can begin to talk about some of the mandatory coverages. The first and foremost, most important coverage for any commercial business, including those in the food processing side of the world, is going to be commercial general liability. This is the liability coverage that exists if you are found liable or acting negligently and cause damage to third party's property or cause bodily injury to a third party. It is a broad coverage that covers a number of different things. It has a number of different sublimits included within it that I don't want to go into too much detail on. And most insurers, as part of their commercial insurance packages, will include a number of extensions and endorsements that come with it. Common examples of claims that we see under commercial general liability are going to be slip and falls, say at your production facility or your offices, damages to vendor or customer equipment in delivery, say, of products or equipment you were to damage somebody's property or otherwise injure third parties. We do see commercial general liability picking up those exposures. Now, importantly, the greatest exposure for food processing comes in the actual products that they're producing. So very similar to commercial general liability, products completed operations liability exists to extend coverage for bodily injury or property damage to things that you sell. So not necessarily slip and falls on your site or directly accidentally damaging the property of others. But if you were to sell a product that was to injure somebody at a later date or somehow cause property damage, there would be a very important coverage to consider. This one is probably the most important liability coverage that exists for companies that are processing and producing food products. And they can cover every kind of loss from contamination, mold, fungi, what have you, that was to injure somebody, even allergic reactions that were not necessarily stated properly that you could be sued for. We want to make sure that there's coverage in place for that. And of course, with all liability coverages, it's not only to pay out damages to other people, it's also to make sure that the legal costs associated with fighting these battles are included. So if you are named in a suit because of one of your products is contaminated in transport, not necessarily your fault, but the legal cost to defend a wrongful death or injury to a third party can be expensive. And we'd much prefer the insurers pick it up on as part of the products completed operations liability than having to pay it out of pocket. Moving forward very quickly today, there are a number of property limits to consider. Property being the other half of the property and casualty coin. If you have a building, we would want to make sure that if that building was subject to fire, flood, hail, vandalism, theft, what have you, earthquake, though I'm not sure how many earthquakes are likely in Manitoba as opposed to the West Coast. We'd want coverage there. Also tenants improvements if you don't own your building, but have made improvements to the space, chilling fridges, kitchen equipment, fume hoods, sanitation, any decorations even, security systems, anything that you have inside of a space that you're leasing, we'd want to make sure that there's coverage for as well from the same perils, fire, theft, hail, flood, and other extended broad form coverages. We can extend this to stock as well. Stock being raw materials, your flour, your eggs, as well as finished goods, packaged products ready to go out. And in this case, we want to make sure that if there was a breakdown to one of your fridges, for example, and you were to lose $250,000 worth of products ready to go out on shipment, that there would be insurance in place to help cover that loss. Equipment is important as well. Excuse me, I'm hoarse this morning. Equipment is going to be anything that is for production, packaging machinery, ovens, stoves, fridges, fridge equipment. A lot of those items fall into this category as well. Now, an important coverage I want to talk about is business interruption. Business interruption is considered part of the property section because it's usually triggered by a property loss. For example, if there's a fire in your facility that forces you out of your building, we want to make sure that there is coverage in place to help pay for your lost revenues. Business interruption will kick in to make sure that your revenues and profits are paid out until such time as the facility is restored to a usable state. Now, this is really important when you have liabilities to pay for, debts, key staff to retain, accounting to continue doing. All of these items are going to be things that you have to pay for. And in our experience in commercial insurance, business interruption claims are typically 3 to 4 times the size of the actual property loss. So though your facility may be down due to about $150,000 worth of fire damage, being out of that facility and not being able to operate properly for 4 months is going to be far more damaging to the business than the actual property damage itself. So business interruption to us is considered a mandatory coverage, and we at Fuse do not let anyone really carry a commercial package policy without carrying business interruption. The last item here as part of the property section is going to be equipment breakdown. Equipment breakdown is pretty much what it sounds like. The archaic story of insurance is that one of the first property coverages available was for boiler and machinery insurance, when boilers were very common in all buildings. These days, we see less issues with boilers exploding and punching holes in the roofs of buildings, but it was considered special enough that anything related to that kind of machinery was separated out into its own insurance line item. Nowadays, we usually call it equipment breakdown, and it's going to cover for things like power surges, knocking out your fridges or your production equipment, It's going to cover, actual just mechanical breakdown, typically sudden and accidental of production equipment, chillers, what have you. And without equipment breakdown included in a policy, your refrigeration unit, for example, failing would not trigger a loss to your stock. We want to make sure that we have equipment breakdown in there such that if we were to have consequential loss in the case of your stock or raw materials spoiling as a result of the equipment breakdown, that there's coverage in place to cover the business. All right, not seeing any questions pop up so far. Happy you guys are understanding. If you do have anything, feel free to pop it in as well. I'm always happy to make a switch there. Some other mandatory coverages: if you have automobiles as part of your business, you're going to want to see owned automobile coverage. This is pretty straightforward. One thing that I do want to talk about when it comes to auto is that there is a difference between personal insurance for commercial for auto and commercial insurance for auto. The policies themselves are very similar. What's different is the permissive use of the vehicles. I often see businesses attempting to save a few dollars by insuring their vehicles for their businesses personally, with the thought of, well, I mostly use it to commute, and sometimes we do delivery with the vehicle. It's not, full-time commercial vehicle. And I understand the thinking on that. I do. The only issue is if you were to get into a collision or some other kind of claim situation while the vehicle was being used for commercial purposes, your personal auto insurer has full grounds to deny that claim entirely. This isn't probably worth the risk. If you do have vehicles that you're using even a little bit commercially, it is generally better to insure them as commercial vehicles. And you can always talk to your broker as well about what that would look like. Usually, and in Manitoba right now, commercial and personal rates are very similar. It's just important to understand and to communicate with your broker that the right coverages are in place for the business, so we're not running into a situation that a claim might be denied. Owned automobile comes in a couple of different forms. For a lot of businesses, it'll be a fleet style policy. Make sure that you have the correct schedule of vehicles with your insurer, and that every vehicle is insured properly. If you have any attached equipment, say fridge trucks, any kind of mobile equipment, what have you, make sure that you do have that discussion with your broker to ensure that everything is included as part of that. Workers' compensation is a very vital type of insurance. Unfortunately, it's not something I ever get to do because as a commercial broker, workers' comp runs through various workers' compensation boards. In Alberta, it's similar, and Manitoba is going to be the WCB as well. Please make sure that you have workers' comp in place for your employees. I'm sure the government will be very displeased with you if you do not. Some other recommended coverages that are worth talking about. Errors and omissions insurance, sometimes called professional liability insurance, is for covering any damage to third parties financially. For example, if you're providing advice, whether that's business consultation, accounting advice is a classic example, or engineering sign-off, what have you, you could run the risk of financially injuring your clients or your vendors. In production, in food manufacturing, one we often see is contract-based food providing. You are contracted to provide a certain amount of, let's say, processed wheat products, and you fail to meet that timeline, or you were to deliver the product and it does not meet specifications in the contract. The client in this case is going to be upset, partially because they are probably relying on their own production after the goods you provide to them are to arrive. This means that you have caused a financial loss to them. They are delayed in creating the products that they need to do. And they very much do have a recourse against you. In your contract, you specify that you provide a certain amount of products by a certain date. And in failing to provide that, you did cause financial damage. This is an example of when manufacturers' errors and omissions coverage would kick in. And it is a coverage that if we do see businesses with large production contracts, hello, fire truck, large production contracts with specific timelines and expectations, we want to see that. If we ever see businesses providing any kind of business advice or consultative services, we're going to want to make sure that we have professional liability and E&O in place as well. It's usually very cheap for most businesses to include professional liability, especially manufacturers' errors and omissions, is included in a lot of commercial package policies for businesses in this sector, but it is something that's worth discussing with your insurer, your broker, if need be. Cyber is something that we should talk about a little bit. Cyber insurance is the new kid on the block for sure. And cyber crime is also the new kid on the block in that sector. I've done a fair amount of cyber education in the past, and in the last year, especially during COVID, with crime being shut down slightly due to people staying inside, crime has moved into the online space. About 70% of crimes reported in Canada in the last 12 months have been cyber crimes. Over 55, only 55% of organizations surveyed in Canada claim to have any cybersecurity insurance at all. And for a small and medium-sized enterprise, the average insurance claim cost is just under $500,000. This is a problem for sure. There exists a gap between businesses' coverage and education on cybercrime and cyber insurance and where they need to be. Cyber is not as expensive as it sounds. It is something that's incredibly vital. But the sad reality is the majority of businesses in Canada, especially small and medium-sized enterprises, will be hit with some kind of attack in the next 12 months. If you have the opportunity, please do review your security procedures, ensure that you are backing up systems properly, that you're not storing sensitive information that could cause damage to your business or the privacy breach of others. These are all very important considerations, and cyber is quickly becoming a very, very expensive loss issue for the insurance industry. If you have any questions on this, please do feel free to get in contact with me directly. It is something I am quite passionate about, and I'm very much an advocate that cyber should become a mandatory coverage of all commercial insurance policies. Moving forward, slightly less important most of the time for most businesses to be directors and officers coverage. If you do have a business with multiple officers, multiple shareholders, if you have investors, you might even be required to carry this as part of your equity arrangements. Directors and officers insurance can be very important when we're talking about protecting your officers from any lawsuits related to stock underperformance, employment malpractice, including sexual harassment and others, failing to comply with government regulations or other laws of the land, and other negligence in the D&O sphere. It is something to consider if you are taking investment. It is something to consider if you do have a reasonably large size organization. It is very much a at your own will kind of exposure. The underwriting procedures for directors and officers insurance are quite involved, and they do involve a full review of company financials to ensure financial stability and to ensure that there are no issues that are going to arise when the insurer writes these policies. It can be relatively complicated, and I don't want to go into too much detail at this moment, but I am also happy to answer questions on this one if you guys have any. A recommended coverage for anybody that's producing and selling physical products is going to be cargo. Most of the time, when I'm looking at food processing businesses, I'm seeing that they're using third-party carriers. That's fine. A lot of third-party carriers will have a certain limit of insurance available by default. A lot of times, you'll be able to purchase insurance for goods in transit with the third-party carriers. And many commercial package policies also include cargo insurance to some capacity by default. Now, if you're transporting goods yourself, we're going to want to make sure that we have cargo in place, especially if you're doing large shipments. Anything more than $10,000 of stock at any one time is going to be worth considering to cover under a cargo policy. When we're talking about semi-trucks full, $250,000, $500,000, large shipments of products, We're going to want to make sure we have adequate cargo coverage in place, because although we have stock included as part of the property section, that is not going to be included outside of your facility. That's where cargo and transit coverage comes in. For mobile equipment as well, we're getting slightly less common coverages for this sector as we go down. If you have any kind of business equipment that leaves your property, mobile packing equipment, forklifts, skid steers, any truck mounted equipment, any mobile tools, what have you, it's best to insure this equipment under contractor's equipment floater, miscellaneous property floater, installation floater, some other kind of wording, just to make sure that the property is covered wherever it is as part of your operations. Similar to cargo coverage a moment ago, a lot of these items might be included as part of your equipment on your property policy for your actual production facility or leased space. But when it's outside of the confines of that property, you're not going to have coverage unless it is included as part of one of these floaters. All right, specific considerations. So I'm going to hop into a couple different business classes and sort of run through what it would look like an insurance package policy for them, and what specific considerations we need to have that might not be included in the coverages I've discussed. So co-packing. So if you're using a co-packer, you're not a co-packer yourself, you're just a manufacturer that is using a co-packer on contract to package your products. There's typically some coverage in place for goods outside of the property. So we might not need to worry about cargo as much. There might be a $10,000 sublimit in place, for example, for goods that leave your facility for this purpose, for being packaged. Again, every policy is different. Please either read your wording, or if you cannot be bothered, ask somebody like me to read the wording for you to make sure that we do have coverage in place. Now, for larger manufacturers, we are going to want transit and cargo in place to make sure that any product that leaves your site to go to the co-packer is going to be covered throughout that process. And you're going to want to be named as an additional insured under the co-packer's liability policy. What that means is that you are essentially informing in writing the other party's insurance, the co-packer's insurance, that, hey, I am a client of this co-packer. If there is any liability exposure put forward by the co-packer, if they were to contaminate my product by accident or somehow injure somebody using my products, we'd want to be privy to the liability coverage as part of their policy. This is very common for those of you that own businesses. You might have seen similar language before. If you're leasing a space, your landlord is going to be asked to be named as an additional insured under your liability, such that if you were to have any negligence arising from yourself, that would affect the landlord, or in this case, any negligence that would affect your client as a co-packer, that the liability coverage is extended. Some other specific considerations: if you are a co-packer, you need to have coverage for property of others. Typically, you are not able to insure things that you do not have a stake in, that you do not have physical ownership of. However, when you are co-packing, you of course will have a lot of your clients' products on hand. You will be having the raw materials, and at some point you'll be having the finished packaged products in your possession. Of course, you don't own these things. They are the property of your clients, but we need to make sure that there's insurance in place anyway. Usually this is done through, and it depends on the insurer, but it is usually called something along the lines of property of others or goods in the care, custody, and control of the insured. And it provides coverage for goods that you don't own. If we have your facility burned down when you have $1 million worth of client products in it, we certainly want to make sure that when the clients come asking for their money back, that you have the insurance coverage in place to provide that. You're also going to want to make sure that you have products completed operations liability in place. Similar to what we talked about earlier, it is important that if you are sued at any point, say by your client or your client's clients consuming the food products, that you have the liability coverage in place to extend to products that you've sold, or in your case, put through the facility. Community commercial kitchens, I know, are quite common, especially for smaller food processing businesses. It depends on the space that you're in, but you'll often see tenant agreements, lease agreements, what have you, with specific insurance requirements. Usually, we're going to see CGL, commercial general liability, as part of requirements for tenants of these community facilities. Products completed operations liability, which again, you should be carrying. Tenants legal liability is another one. Tenants legal liability is a separate liability limit, though it is almost always, probably 99% of the time, included as a liability extension under commercial general liability wording. Tenants legal liability exists such that if you are a tenant in a space and you were to damage the physical property of, say, your landlord or the kitchen owner in this case, that the liability would kick in to pay for those direct physical damages as part of a lease space. Very similar to commercial general liability wording. Say you were to accidentally burn down one of these kitchens, the commercial general liability would extend any damages beyond the actual equipment and property owned by the kitchen, but the actual equipment, property, any improvements in the space on your behalf are going to be under the tenant's legal liability limit. Could go into definitions a little bit on this one if we want, but just know that generally speaking, a $500,000 tenant's legal liability limit, which is usually what's included in most commercial package policies, is going to be sufficient to cover your business in this case. Food demos. So risks can arise if you are providing food in a fair setting, market setting, store setting, what have you, pop-up store, bar, restaurant, whatever you're doing. You need to understand that if your food directly injures a third party, it is prepared incorrectly and causes food poisoning. If there is some kind of contaminant, if there is an allergic reaction that you were not able to properly advise of, you could theoretically be sued and there could be damages. Products completed operations liability, commercial general liability are going to be the two big ones that would help cover an exposure like this. And we're going to be covering the cost of legal fees, settlements, any other damages that would arise from these issues. Please, 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 if you are in a like in a market setting, a farmer's market setting especially, that you talk to your insurance broker and make sure that there are no exclusions in policy for actual providing of food to customers directly, because this is a large exposure and we want to make sure that coverage is correctly placed for it. The last thing we want is for somebody to have a liability suit leveled against them and the insurer says, well, at no point were we advised that, it was part of their operations that they were going to be providing samples of food rather than selling it to clients. And we want to make sure that all I's are dotted and T's are crossed so that insurers are, of course, held responsible to the coverage that they've sold. When we're talking about online and international sales, there are a number of factors to consider. You've probably thought about these as well as part of your businesses, but how do I make sure that my food stays edible, safe in transport to clients? How do I ensure that we properly meet the legal requirements of places to which we're selling food? How do we know that we are properly advertising allergens or ingredients for our products to other countries? And there are a number of questions that you ask that insurers will ask as well when we're talking about insuring for selling online. Now, there is no specific insurance for selling online. It is the exact same as selling to a storefront or to a market or directly to clients. It's just the method in which we're doing it can cause some additional issues. Namely, when we are dealing with legal costs across countries, we are going to be retaining two sets of lawyers and operating in two jurisdictions, which is going to increase the cost of claims significantly, especially when we're looking at places like the United States, where things get very litigious, very quick, and very expensive. Typically, insurance is going to be more complicated and more expensive if you are selling to countries like the United States or to Europe. Talk to your broker. For sure, if you are doing any kind of online sale, you may or may not have liability coverage for international exposure, but it's almost certainly likely that a lot of it is going to be just domestic within Canada, if that's where your policy was initially created for. This is something that we are experts in at Fuse. We are actually probably the #1 insurer of e-commerce businesses in Canada right now. If you have any questions specific to this one, please do let me know. Happy to answer. So we've made pretty good pace here. I was expecting about 30 minutes for the actual presentation portion here and try to leave as much time as possible for questions, and we are bang on that. Karen, Aaron, Lori, if anybody has any questions that they'd like to open the floor to. For anybody else, there is the Q&A portion inside the Zoom webinar that you can use here, or you can send me a message directly. Yeah.
Connor, I'm not seeing any questions. One question I did have is when you're working at a co-packer or at a community commercial kitchen, some places allow for storage of products. So whether it be the ingredients or the finished product, you can leave it there for weeks or up to months.
Mm-hmm.
Is that type of insurance needed for that? And have you already discussed the insurance needs for that, for those particular items?
Yeah, definitely. It's a great question. So whenever you're storing business property at a site, whether that's in a community kitchen, in a storage facility, in your own facility, it would be listed as its own location on a policy. So in this case, it would be stock coverage typically, sometimes maybe equipment if you're leaving equipment at these kitchens. You can talk to your broker, talk to your insurer and say, hey, we have, $10,000 worth of product that we're storing at this site, at this community kitchen. We have $10,000 of equipment there as well. And they can include that as a line item in the policy. So no, typically there would not be property coverage in place unless it is specifically stated. And there usually should be no issue with insuring any stock or equipment in a community kitchen in that way. So.
Thank you.
Yeah.
One question we do have here is asking about traveling between provinces for selling and sampling. What applies there? Yeah,
definitely. So that's a good question. One thing that is going to be important is when we're talking about traveling, any auto insurance exposures. So if you have a commercial automobile, knowing that you're advising your insurer that you're going to be using that for traveling between provincial lines, just tell them the radius of use so that you don't run into a claim situation saying, hey, my delivery or transport van, what have you, that I use in Winnipeg is in a collision in Calgary. The insurer saying, well, you didn't tell us that you were doing inter-province travel. Try to get ahead of that. Moving on, we'd want property, goods in transit, cargo coverage, whatever kind of language you want for it. If you're transporting with a fair amount of your own stock and equipment, that we have that covered as mobile equipment, mobile stock, goods in transit, cargo, whatever language, again, you want to use for that. The large one is if we are using this as part of our operations, try to tell everything to your insurers. The liability exposures for this are going to be the same in all provinces in Canada, except for Quebec. More on that later. Products included operations liability and commercial general liability will help protect you from any damages that you cause to third parties, through bodily injury or property damage across provincial lines. But it's important to tell your insurer and tell your broker, hey, we do food demos, we travel outside the province. This is, part of our regular business exposure. Or even if it's a one-off, you can always ask the question of, hey, we're going to be traveling, for some kind of convention, some kind of a sales opportunity somewhere else, just to keep things apprised. 99% of the time, insurers don't care, but we like to be ahead of things. Try not to present a material change to risk unless we have to. So, is that helpful at all, Bobby? I don't see another question pop up. I'm going to say probably yes. Oh, there we go. Thank you.
And if you're taking food samples to a trade show, I don't think, I'm gathering you have covered that already. That would be the same type of insurance you would need for sampling at a farmer's market.
Yeah, exactly. And Bobby asked a similar question there. Specific liability coverage for recommend people doing farmers markets. The big one is going to be products completed operations liability for sure. Tenants legal liability is going to be important as well. I've seen a number of farmers markets request liability coverage from their tenants, exhibitors, what have you. which makes sense. If you were to accidentally cause damage to the site or to the patrons of that farmer's market, we'd want liability coverage to be in effect for it. One thing is sometimes, for very small food processing businesses, they might not carry a lot of insurance. They might, as just part of their, farm business or as a hobby, even go to a farmer's market, go to a pop-up, something like that, and need liability coverage just for that day. That is available. In a lot of cases, it would just be an event insurance policy. These are normally quite cheap and they would cover specific hours, call it, March 10th through March 11th, 2023. This is something that's available in some cases from, most insurers. It's something that we do as brokers. We can provide coverage for that. And honestly, the regular liabilities that we talked about already, tenants legal liability, commercial general liability, products completed operations liability are the three that are going to be important for those in farmers markets. But if you only need coverage for just that market for a day or two, maybe an event policy would be better suited for you.
So to put blanket dates for attending more farmers markets in a season would be acceptable.
If it's a regular practice that you do, it's probably best to just carry an annual liability policy. Mm-hmm. In most cases, liability policies are rated on your expected annual revenue rather than, the number of days you might spend at a market or something like that. So it very much scales with the business. And frankly, you'd never know when a claim is going to pop up. Most claims are occurrence-based. Most policies are occurrence-based, which means that if somebody was injured, you had an event policy, let's say, for those 2 days, and the claim comes up 6 months later, the insurance coverage is still going to go back and cover that because that's the period in which the policy was in effect on an occurrence basis, which is great. Some policies are claims made, you'll see as well. So that's only going to cover the business if the claim is made when the policy is active. And at the end of the day, it's probably best, especially if you're selling products and taking your eyes off them, to just carry liability coverage all year round, because you never know when somebody is going to injure themselves with a product and then, sue you. We'd want that to be within a coverage period. So.
Good point. Does anyone have any questions for Connor while we have him here?
Anybody have any fun claim stories? Anybody mad at their insurer right now?
No one's jumping at the bit there.
All good.
Oh, sorry.
All good, yeah.
I was just going to say, I don't think we have any more questions or comments. So I think this will end today's session. Connor, I'd like to thank you for sharing your expertise on insurance. It's a very important subject that we don't always have at the front of our minds when we are looking at our business, but very important nonetheless. Connor has his information on the screen there. If you would like to contact him with further questions or discuss needs, he's there for you. And I just wanted to say thank you to all the participants for paying attention for this last little bit to hear this information. And Connor has indicated that there is a fact sheet that is available. It will be uploaded to our resources page. I will email everyone the link out for that, and it should be available sometime after lunch. Okay, well, thank you, Connor, and thank you, everybody. And with this, we'll end our session.
All right, thanks so much for having me, guys.
Thank you.